Ben. Welcome.
Thanks for having me, bro.
Absolutely. Thank you for being here. So for the people that don't know you, who are you, what's your name, and where are you from?
Yeah. So some of you may know me as ICT Keswick. My name is Ben Keswick. All right. I'm originally from Poland, but I grew up in a small town called Bournemouth in the UK. I'm 20 years old. I'm an ICT trader, and that's about it. Yeah.
What was life like before trading? Were you working, studying, or doing something completely different?
I've worked many jobs. I've been a lifeguard. I've worked construction. I worked as a cleaner. I could be here all day if I was to list out every single job that I've done. But it was really a rough journey for me. I'd done obviously secondary school, primary school. So I went through that. I'd done college as well, done a 2-year course, business, didn't learn shit. That was pretty much the education for me.
When did you first get into trading?
I first stumbled upon trading. It was actually on YouTube. So obviously back in the day, I was 16 at the time, and you'd get these ads, right? All these people flexing Lambos, supercars on YouTube ads, pretty much trying to sell you a dream, right? Which was trading at the time. So that's how I first stumbled upon trading. And then obviously I got into the retail concepts, support and resistance, supply and demand, these types of trading concepts before getting into ICT.
At what point did you come across ICT concepts, and how did it change your trading?
First stumbled upon ICT within my 3rd year of trading. So prior to that, I've had a ton of experience. I've gone through a lot of shit, a lot of money lost, a lot of accounts blown, and yeah, just pretty much trading retail concepts. And then within my 3rd year of trading, that's when I stumbled upon ICT's channel.
Can you walk us through your complete process when preparing for a trading day?
The market here in Miami opens at 9:30 a.m. New York time. So usually I'm waking up at around 8:45 a.m. I get ready, shower, whatnot, and I hop onto the charts at around 9 a.m. So around 30 minutes time before the market opens. I start on the daily time frame. So any imbalances, fair value gaps, breaker blocks, I'd mark out on the daily time frame. Any liquidity levels such as buy side, sell side liquidity, also equal highs, equal lows, I'd mark it on the daily time frame. From the daily, I like to hop down into the 4-hour chart, and the 4-hour I like to pair with the 1 hour. So whichever time frame looks cleaner, I usually mark out my PD arrays on those time frames. So the daily, 4-hour, and the 1 hour, I'd mark out any fair value gaps, order blocks, breaker blocks, and then I hop down into the 15-minute time frame. That's when I mark out my session liquidity. So things like London highs, London lows, Asia highs, that's what you mark out on the 15-minute time frame.
Can you explain your full A+ criteria and trading model?
I'm looking at a sweep of liquidity, either buy side or sell side liquidity. On the daily time frame, usually what I like to see before going into that trading day is some sort of bullish fair value gap, bearish fair value gap. That will give me a bias for that day. So let's say we're in a bullish fair value gap, we'll have a bullish bias going into that day. So ideally, you want to align the lower time frame with the higher time frame. So if the daily is bullish, you want to see a setup on a lower time frame that's also bullish, okay? Not in the opposing direction, for example, bearish. So what I'm looking for when I'm going into that trading day is number one, a sweep of liquidity. So in this case, since we're bullish, we want to see a sweep of sell side liquidity. For example, London lows, Asia lows, some form of liquidity sweep, okay? Number two is going to be a displacement in the opposing direction. So in this scenario, since we're bullish, if we've just swept sell side liquidity, we want to see a displacement higher, all right? And usually with displacement comes a market structure shift. That's going to be a break above a swing high or swing low. In this case, again, it's going to be a swing high. So once we have a liquidity sweep, a displacement, a market structure shift, number four is going to be your entry model, right? Which is the fair value gap. Once we get that fair value gap, I take my entry on the edge of the gap. My stop loss goes below the swing low. Of course, if you're bearish, it's going to be above the swing high. In this case, it's bullish. And then you just target the opposing liquidity, right? So along the way as well, I like to take partial profits. So one tool that you can use on TradingView is called the Fibonacci tool. So you'd measure from swing low to swing high, you'll mark out that current price range, and then you find 50% of that price range. So if you're going long, right, if you're buying inside of a discount, you want to target a premium. So usually my first take profit is going to be at a imbalance, resting above in a premium, okay? If you're going short, of course, it's going to be the opposite. You'll be targeting the imbalance, resting inside of a discount. Partial profits, you want to be taking at internal liquidity. When you close your full position, you're going to be taking that external liquidity, which is obviously that buy side or sell side level outside of that current price range.
What time frame do you use?
For analysis, mostly I'm using the 15-minute time frame to mark out my levels, session liquidity. And then for entries, I specifically use the 1 minute time frame and maybe the 5 minute time frame. That's the maximum time frame I'll go up to. So anywhere from the 1 to the 5 minute. So that's usually 1 minute, 2 minute, 3 minute, 4 minute. And then the 5 minute is the max time frame that I'm going to be entering on. I don't enter on the 15 minute, okay? Because once you start entering on the higher time frame, your stop loss gets way too big and you're risking just way too much capital.
What session macros do you trade?
I trade the New York session. That, in my opinion, is probably the best session you can trade out there. It's the most volatile. And I only trade 2 specific macros. So these are 30-minute time intervals. I'm trading the first AM macro at 9:45 to 10:15, and then the second AM macro at 10:45 to 11:15. So that usually gives me around 2 windows or 2 opportunities to catch a trade, right? If I don't catch a trade in the first macro, I'll monitor the second macro and so forth.
Do you ever trade the PM session?
I don't trade the PM session, no. I used to trade it, and I realized through backtesting that the majority of my losses that I take are inside of the PM session. So I simply just cut that out of my strategy, and I've been way more profitable ever since.
How long did it take you to become consistently profitable?
It took me 3.5 years. So obviously I had that 3 years of prior trading experience where I wasn't profitable, I was losing money, I was blowing accounts, and that was me trading retail concepts, right? Meaning support and resistance, supply and demand. And once I stumbled upon ICT, it took me around 6 months to learn all of the technicals and go through the mentorship. I went through the 2022 ICT mentorship. That's a very good one to start off if you are getting into ICT, and also the core content month 1 to month 12, okay? I went through both of those mentorships, and it took me around 6 months time to go through all of that content. Now, after watching all of that, I started to finally see some consistent profitability. So to answer that question, I would say around 3.5 years.
How do you handle a losing streak?
I try stay calm, collected, not too emotional. You know, we're all humans, so I'm not going to sit here and lie and say I don't get emotional, I don't get frustrated. Of course I do, but I try my best to just stay as calm as possible, okay? I know that if I trade my model long term and consistently, a win will eventually come, right? So you're not going to stay in a losing streak forever, right? That will eventually break. The most recent losing streak that I had was actually in February this year. So I took 8 losses in a row. That's the biggest losing streak that I've ever had. And that was simply because I wasn't even trading my model, right? So I mostly trade breaker blocks, fair value gaps, unicorn, silver bullet. And I was actually trading inverse fair value gaps. I was trading outside the macro. I was trading a completely different model. Hence I was losing, right? So once I stepped back, I took a step back. I realized what I was doing wrong. I backtested, and going into the next week, I changed a few things and I simply got out of that losing streak very quickly. But to answer your question, longest losing streak was 8 losses in a row, but that could have been completely avoided if I just stuck to my model. Realistically, when I'm trading live, usually I'm not taking more than 3 trades in a row that are losses.
How important is it to do nothing when the market doesn't give you your setup?
It's very important because the days that there are no opportunity, right? Some days when both assets are not correlated. So I trade NASDAQ looking at ES at the same time. So ES and NQ have to be correlated in order for the market to have a high probability environment, right? If ES, for example, is not correlated and is not showing the same price action as NQ is, that's most likely a low probability day, okay? So you want to stay out of that trading day. If you start forcing trades and putting on risk on the table, you're not only going to lose money, you're also going to lose that mental capital. So now going into the next trade or the next trading day, you're going to be less confident. So you're not only losing money, you're actually destroying your own confidence, right? So it's very important to stay out of the market when there's simply no opportunity, because when there is an A+ setup the next day, you're going to be less confident, you're going to be hesitant, you're not going to take that trade because you're going to be so scared of taking another loss, right? So it's very, very important, guys, to keep that mental capital.
The people out there who are struggling with psychology, what would you advise them?
Yeah, so psychology is definitely a big part when it comes to trading. I would only say technicals is around 20% of trading, right? Once you learn all the technicals, you can learn all the technicals in around 6 months' time. Does that mean you're going to be a profitable trader? Probably not, right? 80% is literally risk management and psychology. It's a very, very big part. And it took me, 3.5 years to master. And even now, to this day, I'm still human. I still deal with, losing streaks. And sometimes I am frustrated or emotional. I tend not to be most of the time, but there are some days where you do just get tilted, okay? And that's completely normal. So for the people out there that are struggling with the psychology, my recommendation for you is stick to a maximum number of trades, right? If you only take 2 opportunities in a day rather than taking 8 or 10 trades in a day, you're going to be less emotional because you have a strict plan, okay? And that's also going to prevent you from revenge trading. And one thing that did help me a lot with psychology is simply accepting the risk. So what does that mean, right? Before I enter a trade, I accept the risk. So I'm telling myself in my head, right, before I enter every single trade, I'm accepting this dollar amount of risk. If I take a loss, that's fine, I'm happy with it. If I take a win, that's fine, I'm happy with it. Either way, whatever the outcome is, that's totally fine with me. That way, if you have that mindset before you go into a trade, you're going to be less emotional, less reactive compared to the person that has not done that if the trade does lose, okay? Because you've already accepted the loss before it's happened. So definitely accept the risk before entering a trade. That will help you a ton with your psychology. And also, obviously, what you do outside of the charts will reflect what you do inside of the charts. So if you don't already have good habits in place, make sure to do that, all right? Get yourself in the gym, practice good habits, right? That will definitely help you a lot.
What are your non-negotiables for trading rules you never break?
The maximum number of trades that I'll take are actually 3 trades. So if I take 2 losses in a row, I'm going to call it there. I'm walking away. I'm getting on with my day. I'm doing something else. If I take 1 loss and 1 break-even trade, I'll allow myself to take that 3rd opportunity and that 3rd trade, okay? Whatever the outcome is on that 3rd trade, whether it's a loss, a win, break even, whatever it is, I'm walking away. So maximum number of trades I'm taking in the day is going to be 3. Another non-negotiable for me is both NQ and ES have to be correlated. So meaning if we sweep liquidity and displace, for example, we have a perfect A+ setup on NASDAQ, but ES is not showing that. There's a fair value gap on NQ, but there's no fair value gap on ES, for example. I won't take that trade because 9 times out of 10, it's most likely going to be a trap. ES is the more cleaner asset when you're trading the indices market. So you want to be paying attention to ES. If ES is not showing what NQ is showing, then don't take that trade. Okay, because most likely it's not going to play out. Those are some of the non-negotiables. Obviously as well, if there's any red folder news or high impact news on Forex Factory, look out for that. Don't trade that day. If we have FOMC in the PM or if Jerome Powell was speaking, I won't trade either. Okay, that's a non-negotiable.
What is your RR?
Yeah, risk to reward. So usually it's like a 1 to 2, I'd say. Sometimes 1 to 3, meaning I'd have to take 3 losses in a row, then I take 1 trade, right? It can get all of those losses back in 1 trade. Now, risk to reward doesn't really matter in my opinion. If you actually look at the top 25 leaderboard on Top Step, the number 1 guy on the leaderboard has like a 1-to-1 risk to reward, which is very low, right? So someone who doesn't trade would look at that and think, okay, there's no way he's profitable. There's no way he's making money. He's number 1 on the leaderboard. You know, he's making money. So it really doesn't matter. I get a lot of people in my DMs always asking, you know, what's your risk to reward? They want to know this information where it really doesn't matter, guys. Okay, a 1-to-1, a 1 to 2, a 1 to 3, you can make money with a very low risk to reward. It really doesn't matter. You don't have to catch these 1 to 10 huge moves.
What is your win rate? So
win rate is sitting at around 60 to 70% over the whole year. Now, I will say last year was very, very good for us, okay? I had around a 80% win rate for the whole year, okay? Which usually is unheard of and near impossible. We closed out 10 months in a row, all green in profit, averaging around 5% gain each month. The highest month was around 9%. And then we had 2 losing red months, which was sitting at around minus 2%. So very good results last year. This year, I'd say we're sitting at around a 60 to 70% win rate.
What do you think sets your live streams and your group apart from the other trading communities?
What sets my group apart from the other communities, I'll definitely say, is the teaching aspect. So I'm live trading. I'm not just sending out random signals, right? Buying, selling this, selling that. I'm actually teaching you the thought process behind the trade, why I'm entering that trade, where I'm exiting, where to put your stop loss, where to put your TP. I'm teaching you the high income skill of trading.
What's your honest opinion on prop firms?
Yeah, I think they're great. A very good opportunity for anyone that's trying to get into trading because it's a very low cost to get in, right? You no longer need a live account of, I don't know, 25K or 50K to start trading. You can literally purchase a 50K account for $50, right, with TopStep, and you've got access to a ton of capital just like that, right? So I think they're a great opportunity for anyone trying to get into trading to get that first initial payout. Once they get that payout and they actually make some money, then I think every trader's end goal should be to transition into a live account. So get a prop firm, right? Get a few accounts, get a few payouts. Once you get a few payouts and actually build some capital behind you, put that capital into a live environment and start trading live funds. Because at the end of the day, when you're trading prop firms, it's on a demo account. So it's not a live environment. Emotions are slightly different because you know you're not risking your live money, right? You know you're risking only that $50 investment that you invest into buying that account. So in reality, you're still actually on a simulation account. It's not a live environment. So I think it's a great opportunity to get some capital behind you. But once you do get that payout, definitely transition into a live account.
Why do you think most people fail with ICT, even though the info is out there?
Yeah, great question. So most traders, they come into ICT and obviously they have that prior experience with retail concepts. So support and resistance, supply and demand, and they just treat it as a pattern rather than actually learning ICT for what it is, learning why the market moves that way and trying to understand it. They'll come in and they'll just see an entry model, for example, a breaker block or a fair value gap, and they're going to be entering, right? So they just see it as an entry model. They're not actually learning the reasoning behind why the market is moving that way. Why is it drawing towards those equal highs? Why is it drawing towards that fair value gap? They're not learning the reasoning behind why price is moving, and instead they're just treating ICT as another trading pattern.
If you lost everything today, your account, audience, brand, how would you bounce back?
That's a great question. So first things first, right? I'll definitely go get a job, because how else are you going to make money? Okay, I'd go get a job literally for about a month, save some money up, $2,000 to $3,000, put that money into prop firms. I'd buy 5 Top Step accounts, 20 Apex accounts. That way you have 25 accounts, and then trade those accounts, get them funded. Once they're funded, try get a payout. Once you get that payout, put that into a live account and then scale further.
If you could tap the shoulder of a 17-year-old Ben and give one sentence of advice, what would it be?
It takes time. When I first came into trading, I always gave myself a very short time span. I would always tell myself, I need to become profitable within 6 months. Whereas in reality, it takes way longer than that. So if you're coming into trading and you're someone new, don't expect to start making money or seeing results within 6 months. That's simply just too short, and have a longer vision. Give yourself 3 years, okay? Maybe even 3 to 5 years. It takes a very long time, right? If you're a surgeon, for example, right, or a doctor, you don't want to come into that and say, oh yeah, I'm going to start operating on, people's hearts within 6 months' time. You're simply not going to do that. It takes years of experience. So definitely, if I were to go back and tap my 17-year-old self, I would tell him, relax, you're going to get there, but it takes a little bit more time.
A lot of people listening right now are stuck in their 9-to-5 grind. What advice would you give to someone who wants to escape that life and build real freedom through trading?
I would definitely recommend for everyone watching that's, still in a 9-to-5, they're grinding, they're hustling away. I've been in that position, so I know how it feels like fucking shit. My advice to you would definitely be to start watching the ICT mentorship, okay? If you're gonna take trading as a career, which I'm guessing you are because you're watching this podcast, it's trading related, I would definitely recommend to start with the 2022 ICT mentorship, then move on to the core content month 1 to month 12. Those 2 mentorships there will give you a foundation. Watch all of that content. If you're still not satisfied with the material that he has provided you, you can carry on, watch more mentorships on his channel. He's also got the 2023, I believe, and he's coming out with a ton more mentorships. In my opinion, all you need is the 2022 and the core content to be consistently profitable. You can learn that within 6 months to a year, okay? Obviously, don't rush it. Take your time. Don't just skip through all the videos. Watch the videos carefully. Take notes. And after that, all it comes down to is risk management and psychology, which is the part that really takes time. So that's definitely what I'd recommend if you are in a 9-to-5 job. Don't quit your job as well and just go straight into trading, because you don't want to put yourself into that position where you can't afford to pay, next month's rent or the bills. Definitely not. Wait until you get a few payouts behind you and you start seeing some results, seeing some success. Then you can take that leap of faith and quit your job.
What are some red flags that tell you to stay out of the market and not engage with price for that day?
If we had a massive run up or run down overnight. So we have the Asia session, which is the first session. Then we have London session, and then we have New York session. So if we've either had a massive drop or massive rally up inside of Asia or London session, coming into the New York session, I'll have low expectations. I'm not going to expect good price action, and I'm most likely going to stay out of that trading day because the price action is going to be most likely choppy, low probability. So in that case, what you can do is trade the PM session, but I don't trade the PM session, so I would just skip out the whole day. Another red flag is Powell, okay? Whenever Jerome Powell was speaking, do not engage with the market at all. It's just pure gambling.
Why do you think so many traders learn ICT but still never make it?
They don't have a daily bias. There's no narrative behind the trade. They're simply just looking at a PD array and entering, right? There's no story or background behind that trade. You have to actually have a reason to why price is going to head in that direction in the first place, not just take any entry model on the screen that you see at that time.
What sparked the idea to turn your trading into a live community?
Yes, this is a good one. I was actually bored. I was sitting in my room. I was very bored. When you're a trader, you have a lot of spare time. So you're making money now. Some days you can log on, right? And within 15 minutes, you've already made your money and you're done for the day. And you have nothing else to do for the rest of that day. So I love seeing people succeed. We had a guy recently join the mentorship. So I don't publicly advertise my mentorship. I take people on privately behind the scenes. He had around 6 months of experience when it came to ICT. He joined the mentorship and within 2 weeks, he got funded and he also got paid out, right? And now he's consistently getting payouts. He's had around 4 or 5 payouts ever since then, and his life's completely changed. So I love seeing that. And there's a lot of traders out there just overcomplicating things, right? So I wanted to come in, change a few things up and actually simplify it, right? Because ICT, he has over 40 videos on his channel. Majority of the topics that he's talking about, yes, he's providing value, etc. But 80% of the video is him just chatting absolute shit, right? He's talking about his family, he's talking about his dog, whatever, right? So I wanted to make my own channel, cut straight to the point and simplify it. I've got many videos on my YouTube channel explaining the model that he teaches, and it's literally a 20-minute video rather than 40 1-hour videos long, right? So it cuts straight to the point. And also a live trading community, it builds that transparency. There's a lot of fake traders out here trying to fake it. They'll post fake payouts, fake screenshots online. When you're in a live environment and you're trading live in front of hundreds of people, you simply can't fake that, okay? There's nothing fake about it. So I go live every day at 9:30 a.m. New York time. You guys can come watch me take my exact executions, copy the trades, learn the thought process, etc., etc. But yeah, that's probably the main reason why I started this, is just to build that transparency and actually show you reality of trading, right? When I take a loss on live stream, I'm taking a loss. When I take a win, I take a win. Okay, I've got nothing to hide. All right, guys, it's been an absolute pleasure to be on the podcast. Thanks for having me on, bro. Really appreciate it. If you are someone that's stuck in that 9-to-5 rat race and you're working a job every single day and you want to get into trading, specifically ICT, I trade live literally every single morning at 9:30 a.m. New York time. So if you are someone that's interested, make sure to check out the links in the description. But other than that, guys, hope you lot enjoyed. Please leave a like, leave a comment, share and subscribe, and I'll see you lot in the next one. Take it easy.